for more on the rising prices, gas prices are just part of it, an overall price increase. And now the Federal Reserve is trying to slow those price increases by hiking interest rates by 0.25 percentage point. It's the first increase since 2018. And for more on it, let's bring in CBS News business analyst Jill Schlesinger with how that could affect consumers, like the people watching at home. It's a little confusing because prices are going up, and to make them go down, you raise interest rates.
Right, because we just want to slow down the pace of borrowing and spending. And so this will directly impact pretty much everyone. The good news first, savers. You could start to see a little bit more, and I say a little bit more, in interest rates when you look at your savings, your checking, your money market, your short-term CDs. Borrowers, however, are going to pay more to service their debt. The most direct impact, credit cards. You're going to see those interest rates start to rise. New car loans will start to rise, but, the amounts aren't that much, so it's a few dollars a month, and I think that's important. Small business loans can be more expensive. Variable mortgage rates can be more expensive. So borrowers, it's going to cost you more to service your debt.
What about car loans and new mortgages?
Well, I think in new mortgages, the thing that's really important is it doesn't key off of the actual rate that the Fed controls. So it's a longer-term interest rate, the 10-year Treasury. Those rates have already started to go up. If you look at mortgage rates right now, we're at about 4.25% or so for a 30-year fixed-rate mortgage, and that's up a full percentage point from a year ago. Now, that may slow down the hot housing market, but it's going to make it more expensive to buy a home.
It was interesting. Oh, go ahead.
Go ahead.
Well, I was going to say the Fed, they voted on this. It was an 8-1 vote, and the one no vote wanted actually a higher increase. So it seems like this is the beginning of yet more hikes.
Absolutely. The Fed also releases projections about how they think the economy is doing and where they think interest rates are going next. And according to Fed projections, they're looking at another 6.25-point interest rates increases this year. That will bring us up to just under 2%, and another 4 or so next year. So we are going to see interest rates broadly rise pretty quickly over the next couple of years.
I want to go back to gas prices. I was in L.A. recently, and the gas prices in some places were over $7 still. And people say, look, I got to drive, I got to get to work, I got to get to school, et cetera, et cetera. Is there anything consumers can do to handle the gas prices or protect themselves against
I think this is where consumers have to do something, because the Fed cannot actually pinpoint gas prices on this. They can try to slow things down, but as you said, people have to drive.
Yeah,
so what you need to think about is this. Okay, I've got to drive. Maybe I can carpool, fine. But maybe I should be paying cash, because you can save 5 or 10 cents a gallon to pay cash. Maybe I should use regular gas. Filling up on Mondays and Fridays, theoretically, should actually save you a little bit of money. And note to very bad drivers, your aggressive speeding and braking. That is very bad for fuel consumption and fuel efficiency. So ease up on the highway.
Can you use regular gas if your car says you have to use premium?
I don't know. I follow. I'm a direction follower, so if they say premium, I think I should do premium. But a lot of people tell me it's kind of bunk.
I like this no speeding
Yes.
recommendation.
Yeah.
Can't make that promise, a lot of people are saying.
I like the day you said about filling up on Mondays.
Yeah, Mondays and Fridays.
And paying in cash.
Yep.
Jill, always great to have you. Expert analysis as always. Thank you very much.